Okay, so good morning everyone. Um, right, so today is the 20th of July, it's a Monday in Singapore. So today I thought I'd do something a little bit more in depth, more in depth. So hopefully this gives a better idea on what exactly I'm looking at. Sometimes, when do we hold trades for a couple of days and when do we get in and then just exit the trade immediately? So scalping is important, swing is important, higher time frames are important. So I was thinking if I put a chart this way, um, it may be more beneficial, right? So uh, then we can see what's going on the lower time frames and then what's going on the higher time frames and what's going on the daily or weekly time frames. Okay, so today the trend that looks up according to the currency strength, right? Currency strength is important. We'll start with the euro yen. Now, currency strength on Mondays, Singapore time, it's not the strongest. Price can just move and then immediately it stops. So the real price movement comes on Tuesday, Wednesday, Thursday, um, Singapore time. Okay. Um, so euro yen on this Monday morning is generally I am interested in the upside. Okay, so let's look at this weekly time frame over here. Okay, so, this weekly time frame over here. So currently, what we have is something that looks like something that now saying that this is 1, 2, 3, not okay, but this can also be 1, 2, right? And then it just goes and breaks this low. So at this point in time, what I would suggest is not caring so much about the weekly because it's 50-50, you see. It's 50-50. If this does happen to do that, but on another chart, you might find that it does not do that, but then instead of doing that, it does that. So I'm not gonna. I see it on the weekly time frame. It can really go both ways. However, on the lower time frame, I mean, say around the if I'm not looking at the not time frame, if I'm not considering this weekly swings, right, up or down, because 50-50. So I'm looking more at like the 4 hourly over here. You see that? This is the 4 hourly time frame. So I'm thinking to myself right now, okay, according to the time factor, this one looks down. Okay. This one, potentially, yes, it could come down. And this piece over here is actually, will actually be this piece over here. See? So yeah, it could do that. It could do that. But this does not mean that, right? It could, but again, 50-50. So we're not thinking so far. We're not thinking of that. So what is of immediate interest is, okay, what if it does something like this, you see all this? So if it does something like this, yeah, then you might say, okay, it will come down to this level. Any one of these zones, maybe, any one of these, it might come. It might go up again. There's no telling what all that might be. But if you see something that looks down, yeah, sure, you can take this down. However, if that doesn't happen, if you don't see strength like this down, what's the other outcome? Well, this can also do that. This is all the correction, and then just this crawl, and then you crawl to there. And then people who were selling, because they thought impulse, well, they will be they will be stopped out, or the count will be blown because they might put too big a lot size, and then this goes up, all the trades get closed out, and then finally it drops like that. Okay, so as of now, the euro yen actually looks like there's no downside yet. This looks like setting it up, but there's no downside yet because it's not done anything that suggests that it's going down, right? So picking tops is always a bad idea. correct? So it has to come down first before make some lower lows like this, you know, like all this, like you see, like all this pull, it breaks. See all these little breaks, stuff like that. It has to break something in order for it to start moving. So this case is actually breaking to the upside. So don't forget, this can also crawl up like this, right? So at this point in time, it looks up. So on the shorter time frame, it's like see here on the 15, which we are somewhere here. See here? So right now we are somewhere here. I'm thinking that I'm still interested in a short term buy actually. Very, very short term. It still looks up. But if this one can come down to some levels like that, even like this, yeah, it can go up. So this one more up is what you're actually interested in. Even though you think it might be impulse pressure impulse, but sometimes we just need to block that from our minds and just trade for the moment. Do what's right for the moment. Because even if this was going to come, even you thought this was going to come down, well, it just went up and just stayed here for quite some time. So the opportunities here are all actually up. Right? If you're turning down, that means the counts in drawdown, and there's no telling where this can crawl to. Right. So that's the thing about Euro Yen. There's something else. This crawls also. You see this on the euro dollar, and you see this in the euro dollar when it's in its fourth wave. So when that happens, trading can be quite tricky. So let me just show you that. Okay. So over here, this was sort of the forecast for June. Let's look for euro dollar over here. So you see, this was this live chart over here, trying to map out the swing. So I said, well, Elliott Wavers rejoice because they love the 1, 2, 3, 4, 5 idea. In case of, if you don't know what Elliott Wave is 1, 2, 3, 4. This can be complex, 5 like that, right? So this is 1, 2, 3. See, it's quite. My idea is quite simple. The unfortunate part is sometimes this doesn't happen, and that's all you get. Then it just maybe just shoot drops down or goes a bigger sideways before it goes up again. So so over here, yeah. So as you can see, it finally went up, but it went up in a very difficult fashion. Very slow crawl, basically. Very slow crawl. Okay. So 1, 2, 3, 4. So this 5 was not the strong look, but was like a sideways look to the upside. So if we don't look at it on the higher time frame, and we just kind of looking at this whole piece on the very low time frame, we might think that this is actually like that, and then this was actually coming out like a 1, 2, 3. Okay, so having an eye on the higher time frame is quite important, because when the higher time frame takes over, then we don't want to be just staring at this crawl, thinking that this is kind of weak. Then it is suggesting one more down, So the entire context is quite important. So in this case, the bias was more to the upside. So you broke this. So you think, I think this is probably going up. This is quite strong. This is a strong break, and then a slow push, and then the whole thing looks like a fourth wave or very difficult fifth wave. It can happen that way. Now, when this one goes up here, you might think, is this coming down? Well, we'll look at that soon. But we have studied the high time frames before we can decide whether this is coming down or not. On this look, usually there is one down. Yes, usually there is one, but the bias might be that. However, when you go up to the 4, bias might be this. So the 4 bias might be this, but on the data weekly, this might be a wrong idea actually. Okay, so we gotta study it carefully later. In fact, why not let's do it now? I want to look at something else actually. Let's look at Euro Pound. So Euro Pound, okay. So euro pound. Okay, let's go look at the monthly for euro pound first. Sorry, excuse me. Euro dollar. Euro dollar. So if you see this piece over here, so right now we are here on the euro dollar over here. Is euro dollar now? Actually, this is a trend line. Actually, this is awfully strange. But if you look at Nikkei, this is all green. So what if this continues to the upside and this has gone on pretty long, you know? So what if euro dollar is on its way up? Now, on its way up, you could also, remember, you could also do like a straight slow crawl like that. It does not have to shoot up that way. Okay, go up this way as well. So does it look up? It looks up. This weekly looks up, which means if we look at the euro dollar, now let's look at this part over here, which means let's say now you're looking at the euro dollar, which is this one over here, and you see this one. And you're thinking, 1, 2, 3, 4, 5, this is what I was taught. Elliott wave, followed by a pullback, then you go again, right? Now, this part here is tricky, can be tricky to trade, I would say. So unless you get some real confirmation, like it came down here, it went, then a second wave, and then that confirms another wave down. Otherwise, this is not safe to take. The reason for that is because of the higher time frame bias, where this could potentially go to the upside. So you must understand, if you're going to trade this down, you're going to trade this down like this. Okay, let me make it more clear. Let me just put let me just draw this line over here, like so. Okay, so you say, okay, I think this one make one down. Now this one down, maybe, who knows, it just drops, or it retraces, it goes back up again. Okay, but anyway, what they have in common is one move down, right? So let me just sync this chart. Okay, I just want to sync it there. Now you can see it appear over here, right? So what this is, it's over here. And since on this time frame, you're thinking, this looks like 1, 2, 3. And if I think this is up, and now on this time frame you're trading down, you have to understand we are potentially going against that there's that trader psychology, you know. We are going this one on weekly I'm thinking upside, but this one I'm thinking downside. So unless I have a very good reason that gives me, that sets up my risk reward, just selling it here might be wrong. Because why? If this never happens, what will happen? This can just simply, the idea of this, okay, that will mean that the idea of this, followed by pullback, maybe this never ever happens. All right. And then this one just simply keeps crawling to the upside. And it just keeps, maybe it just pulls back and then it crawls again. It just shoots up, it crawls, maybe come back here, then it shoots up again. And it will never make this pullback. That's what I'm trying to say. Because when it's making this kind of impulses, they don't pull back as much as we hope, right? So let's go look at what this piece was. Hopefully, yeah, and that's exactly what I mean. As you can see, because I think putting theory to chart is very important. So let's say, like, anywhere over here, I guess, you know, you might call this well, you could call this that, right? But this could also be, let's say someone does not want to use this kind of running flats, right? Although on hindsight it does look good. Yeah, it does look good hindsight. I don't quite like the way my T shapes up, but okay, anyway, so from here, 1, 2, 3, even depending on one, this was like let's say the 1, 2, and then all this is a 3, and then this is 1, 2, 3, right? You see how it just keeps pushing. So say I'm interested in a count from this piece on. Let's see, 1, 2, 3, 4, 5. So now 1, 2, 3, 4, 5. one wave. This is another. This is a pullback, another wave, right? So I'm not gonna call this that. I have my own reasons, but I like to call it this 1, 2. Okay, 3, 4, 5, and then it's supposed to get a pullback, and then after it's supposed to go again, but not necessarily. See, it just pulls it very deep. So the wave can just look like that. That's what I'm saying. You don't have to get there's no this part here, this part here is not necessary. You see, it's not necessary at all, right? Even if you consider this that 1, 2, 3, 4, 5, then you get a pullback. But this was not just a pullback to around here and then it goes again. No, just this is all there was, right? But anyway, if it's an impulse wave, as an impulse wave, 1, 2, 3, 4, 5, followed by long sideways, this actually has got a good potential to actually get up to this very top. It's a good potential because if you trust in that wave, you think it's the first wave up, that means this one, you should take the buy. And if you take the buy and you're looking for this sell, what I'm trying to tell you is that this may never come, right? Because this one never came here and went up there. So, okay. So this one, what this one might be, this one might just keep, okay, let me just, this one here. So just, yeah, this one here could be, okay, it's just, there are many scenarios that could play out, but this one could be, even if it's up here, it could be that. And then, just so many scenarios that could play out, you know. It could be 1, 2, 3, 4. Okay, let me just go to the lower time frame. No, I don't like this time frame. Let's go look at what the chart looks like. 1, 2, 3, 4, 5. Yeah, it could be. It could be this or this one. What I'm trying to say, this one could just keep pushing the upside. It could just keep pushing the upside, and you never get this pullback at all. So in order to take this pullback, what I'm trying to tell from the point of safe trading is you still need something that comes. Like you see this one, it goes up, it comes here, and then it goes up again. So you need something like that. What if this one just falls straight through? Well, then maybe if you're not you can't take the trade, not on this time frame. But what I'm trying to say, if you want to be completely safe and conservative, that is the look that you need. That is the look that you need if you're conservative. All right. If you just take the sell here, you can't really do that. Or your stop loss has to be quite large. You need a big stop loss. All right. In order to, you need big stop loss basically. All right. So I've explained the dangers of it, and from a time factor trading point of view, this time that if you think that on weekly this is going to go up, this is actually going against the higher time frame, which is a dangerous thing to do. Okay, because this thing, if it starts crawling, you'll never be able to exit, and the account will go bust without stop loss. That's $0. I think I can't explain that any clearer before the chart. Just do like this. Okay, anyway, let's look at dollar yen. So it's over here. Okay, dollar yen. Dollar yen made one push. See on this lower time frame here. See, it actually made a push to the upside. Early Monday morning, it made a push up here and then immediately pulled back. Likewise, this one also has got some kind of my thinking, this, that. Okay, now the thing is this: euro dollar. I'm kind of biased to the upside for euro dollar, and euro dollar has got USD in here. So if I want this euro dollar to accelerate up, right, it helps for me to have some kind of dollar weakness. No, dollar yen could also push up, but generally you do want this to come down. That makes sense. In other words, even though even though we have something like this, but remember what I said? I said that this can also do what? And then everybody who thinks that, yeah, that's right. Those who rely on this strategy will be caught out when this falls and breaks this low. So it's kind of unfair, right? On one hand, I'm saying, oh, I like that. I like this. On the other hand, now I don't like it. Now I like this. See, it's not fair. But the thing is that the context and the correlation, the risk management, the deciding which pair is better, looking at currency strength, they all, it's like chess, you see. You can give someone a book of chess, but two players might play the game differently, and one will just turn out to be better because they interpret the information in a different way. All right, so my best I can do is just tell you what's on my mind, and when it comes to trading the bias, my biases so far have been 5 out of 5, for the month of June. So not always right, but most of the time I think some consistency. There is consistency, right? It comes to finding the bias. So, but once the bias is there, from the trading point of view, I'm quite wary of this big push at upside. Even in the event that I do take this buy, it would not be to aim for a top here. No, it would be more like, because there was one push up over here, okay, I'll take one more buy, but up to here. So let me put that in perspective. Let's say from anywhere from this level, we decide to buy up like this. So let me sync the chart. All right. Can you see? Can you see that it's only that? It's not like I took the buy here, I took the buy here, some 15-minute, some sideways, and then I think it's gonna go up there. No, it's not that. It's from here to, in fact, you can't even see it on the weekly, but on the 15-minute, on the 1 hour, you can see it. So the trade is gonna be in and out. If I see a reason to enter, yeah, I see a reason to up to here, and then you depending on how many lots you want to put, right? So about 15, 18 pips, that's it. Because why? And also euro dollar, for me, euro dollar looks better long term. Okay, the euro pairs look better long term at this moment in time. So this moment in time on this Monday, I'm thinking, I think this week I'd like to play the euro long. So, but if I play this dollar yen, it would be very short term like this only. You see, it's not something that's going to be, see this to here is from here to here. It's from here to here, but it's not, and what it's not from here to here. It's not impulse correction impulse. Because if you enter here, then you're going to go, maybe you'll be stopped out for sure. There's no way you can enter here to stay until there. Unless your stop loss is very wide. You need a very wide stop loss because this needs to breathe. And if it breaks this low, well, the account will go bust. And most you lost will be what's in the threshold range of loss that we're comfortable with, right? So I want to put that in perspective. So the correlation, right? And I think these two examples should have benefited some people. Last one, let's look at Europe. What's the time now? Keep this a bit short. I think I'll just end here, and then maybe, who knows, maybe shorter videos, but a bit more frequent so that we can update what's happening in the markets. Since it's always shifting as the week progresses, right? So thank you for listening, and take care. Bye-bye.